Welcome to Trade Ideas. I'm Jake Merl, sitting down with Maj Soueidan, co-founder of GeoInvesting. Maj, it's great to have you on the show for your very first Real Vision interview.
Thanks, Jake. I really appreciate the time you take to have me here today. Really look forward to talking about microcaps today and the advantages of investing in them from my perspective, and how our company GeoInvesting has been playing a part trying to bring awareness to the space.
So based on my knowledge of microcaps, they seem to have a pretty bad reputation. For example, they're pretty illiquid and people refer to them as penny stocks. There's a lot of pump and dump schemes, there's a lot of fraud. So Maj, do you think any of those concerns are valid?
They're extremely valid. But let me point out, they're valid at any market cap, Enron. You can have big caps, small caps, micro caps, nano caps. You can have fraud at any type of level of playing field in that universe. So it's really important just to do your homework and understand whatever you're investing in. But because of these stereotypes that financial media places on this space, it creates a lot of opportunity to find a lot of great companies. And we'll talk about that later, but you'll be surprised at some of these incredibly revenue-generating companies and profitable companies that trade in the OTC that are microcaps. And it's not the size of the microcap that determines revenue. So if you're willing to look a little deeper and do a little homework, you can find some incredible value in that area.
So if perhaps the illiquidity fears and the fraudulent fears are a bit overblown, what are some of the positive attributes for microcaps? What are some of the advantages to owning them?
Let me say that I don't think they're overblown. They're definitely there. But what's overblown is a misconception that there aren't good quality companies in the space. So I think that's really important to understand that. Looking in places where other people aren't looking or competing just makes logical sense to be looking for these ideas. And the regulatory environment has changed so much since 2008 crisis that it's making it harder for a lot of retail investors, institutional investors to invest in the space.
And why is that?
Well, it's interesting. So since the recession, you would think that people are more risk adverse, so they want to take less risk. So what has happened actually is there's been more of an appetite for risk, in my opinion. And it's really kind of affected the way that the microcap universe has evolved over time. So people are adverse to holding stocks long-term anymore. That combined with the growth in ETFs, index funds, people, longer term people are investing in index funds. Because of the 2008 global recession, this is all in the back of our heads, and the second there's a volatile moment in the market, we all get scared, people sell, panic. So everyone's thinking shorter term. So what ends up happening is a lot of investors start craving pump and dumps, biotechs, the sexy stories that promise you short-term returns, cannabis, blockchain. So it's counterintuitive. So what happens is these stocks are getting a lot more momentum. And there's only so much money to go around in the market. So when you're talking about the microcap universe, a lot of these, what I call tier one microcap companies, you're really valuable companies, revenue profitable, but they're not sexy maybe. They're not putting out sensational press releases. They kind of get ignored. And then you have, so basically investor psychology has caused a lot of this shift. 2008 also basically eradicated a lot of the retail investors. Retail investors used to be the first type of the front line to find these companies. So the process used to work like this, back in the day. You'd have the retail investors come in and buy these stocks, creating enough volume for these stocks to go up. Then institutional investors would come in and buy these stocks and then take it to another level. So we just create this nice liquidity, and it worked really well. But everything's broken now. There's less retail investors finding these stocks. Institutional investors have, this regulatory kind of environment is making it less possible for them to buy these stocks. So it's the whole supply-demand kind of environment has kind of changed over time. So it takes a lot longer for these companies to kind of be recognized. So that's kind of the environment that's changed. And you have a lot more, you have a lot of different fraud now. You have pump and dump frauds, more sophisticated, not just on the OTC anymore. You had the China fraud that we were pretty big in outing between 2009 and 14. We're still doing it now. So the whole environment's changed, and you have short selling, sites like Seek and Alpha. So we're kind of all naturally on edge all the time, and that's just changed a lot of the environment. So I think the just shorter term nature of this market has really made it tough for investors to want to be in these illiquid names that maybe don't react right away, where it might take some time. Tremendous opportunity though, if you're willing. Although it takes longer time maybe to realize values in these companies, it's taught me as an investor because to like, wow, investing longer term is incredible. You know, I've always been an opportunistic investor. I was able to find lots of great gains, 6 months to a year into these names years ago. Now it takes longer, but it's forcing you to actually do better research, dig deeper, and hold these things for multi-bagger returns over time.
So basically, you're saying that the microcap market right now is kind of inefficient. There's a lot of illiquidity, and there's a discrepancy between these high-flying cannabis names and blockchain names versus these tier one names with value. Is that basically what you're saying?
Yeah, it is. And actually, I feel like although the market in general is more efficient as we've moved on, I believe it's more inefficient than ever in the microcap universe. And what great place, who thought that would ever happen? And what better position to be hunting in a ground like that. So you have less people looking for the opportunities. You have less people allowed to look for opportunities. You have brokerage firms making it harder, for retail investors to buy these companies. So it's just great if you're willing to look there and have a time horizon more than 1 minute. The average holding period for a retail investor, or investors in general really, has slowly gone from 6 years to 6 months. And that was as of maybe 3 years ago, but it's probably less now. So that really tells you the state of the space and what's going on.
Maj, well, thanks so much for shedding some light on microcaps. It was great having you on the show. Thanks so much.
Thank you, Jake, and I look forward to being here again.